Hello everyone. Today we will have a brief discussion on fundamental analysis part 1. So there are three questions that come to our mind when we talk about fundamental analysis. The very first question is, what is fundamental analysis and why is it required? The second question is, what are the fundamentals that determine the value of a firm? And the last question that come to our mind is, how to do fundamental analysis. In this video, we will be trying to answer all these three questions in a brief manner. Question number 1. What is fundamental analysis? Fundamental analysis deals with analyzing the fundamentals that determine or influence the value of a firm or an operating asset. What is the objective of fundamental analysis? If you want to know the answer for this question, it's very simple. We want to know what is the association or the relationship between fundamentals and the value of an operating asset. Why is it required? Why do we need to do fundamental analysis? Because we want to predict what is the price per share or what is the enterprise value of a firm. So in order to do this, we need to have an understanding about the fundamentals that determine the value of a firm thoroughly. Question number 2 we would like to answer is, what are the fundamentals that determine the value of a firm? Many times the stock market traders and the investors as well as lenders or anybody who is interested in the investment space are really struggling to answer this question, what determines the value of a firm? All of us know that it is very difficult to answer this question, but having gone through the financial statements for a number of years, I can tell you that you can definitely try to make some sense about how the company is going to do in terms of its valuation in the future. So to put it briefly, the focus of fundamental analysis is to relate the fundamentals that determine the value of a firm with that of its value. The following these are all the few examples for the determinants of the value of the firm in terms of fundamentals. For instance, the payout ratio, which is otherwise known as 1 minus retention ratio, is one of the fundamentals that determine the value of the firm. The second fundamental that determines the value of the firm is the growth rate in earnings. Earnings means profit, otherwise known as income. So growth rate in operating profit or EBIT or growth rate in net income or PAT determine the value of the firm. The next factor is cost of equity or capital. The next one is return on equity or return on capital. Return on equity or return on capital are the overall performance measures which can be computed using the financial statements of the company. The next one is the profit margins of the company. It may be PAT or operating profit margin. The next one is tax rate, and the next one is depreciation. The next one is capex, that is additional investment in capital expenditure, and delta net working capital. Delta means change. So delta net working capital means change in net working capital of the firm. So these are the fundamentals that determine the value of the firm. You are enjoying the background of the music, right? So if you look at the music, you have to just look at how it is been composed, right? You need a singer, you need somebody to write the lyrics, you need somebody to play the instruments, and you need somebody to coordinate the entire thing, right? So if everything comes in place, then the music is beautiful to listen to, right? Isn't it? Similarly, if these fundamentals are good enough for the company, they are going to give the value for the company, right? So that means if you have to succeed in the valuation space as a manager of the company, you have to make sure that you are going to manage the value of the firm using these fundamentals, right? So the last question in this video we want to answer is this. Okay, we have understood what is fundamental analysis. We have understood what are the fundamentals that determine the value of the firm. The last thing we want to know in this small video is this, that is how to do the fundamental analysis exercise, right? So in my view, we need to do the fundamental analysis exercise, which I am going to do in the future videos. So we are going to learn how to do the fundamental analysis for real life companies using real life data, right? So that means data is the key point. So that means we have to make sure that we collect the data from various sources for all these fundamental variables, right? So what can be those sources of data? Number one, you may use money control website for Indian companies, wherein you can just go through the financials section of these companies. You can get to know about the balance sheet numbers. You need to know about the cash flow statement, income statement numbers. So you can also get to know about the comparable companies numbers, right? So all these things are disclosed in the money control website for the last 5 to 10 years. So last 5-year data is suffice to find out how the company is doing in terms of these fundamentals. The second thing we need to collect is beta. We have to find out cost of equity. For that we need equity beta. So equity beta you can take it from Economic Times website or from the stock market websites, BSE or NSE websites do talk about the beta for the companies, or any other database you feel it is right enough, right? The third one is we need to know about the risk-free rate. You just Google it, just search for what is the risk-free rate for India, you will get to know the numbers. The next one is equity risk premium. So we can find out that from the updated version from Damodaran's website. Damodaran is the renowned person in the valuation space. He keeps updating his website for all the valuation inputs for all the countries. So if you want to know what is the risk premium for India, for example, you can just go through his website, find out what is the latest number for finding out, right, the cost of equity for the company. And the next one is we need to know whether the company is manipulating its financials or not, right? To put it in other words, it is a kind of fraud detection we are going to do, right? So because it's not only important that you know what are the fundamentals that determine the value of the firm, it is also important to know whether the company is making any fraudulent practice in terms of disclosing its financials, right? So in order to know that, there are many tools that are available. One of the best tools which you can use is Banish M-Score. So that means you can just go to the financial statements of companies for the last 2 financial years, collect their data on number of variables, and then find out whether they have manipulated their financials or not. So this can be collected, data can be collected from your annual reports of the companies. And the last one we need to do is we want to know what is the relative financial performance of companies, right? For example, company A is doing good. It's not suffice that you know only about A. You also need to know what is the relative performance of A on the fundamental variables in relation to other companies that are operating in the same sector, right? So in order to do that, you need to collect the relative performance of variables, or you need to collect the data on variables for all the comparable companies. That is possible if you can go through their annual reports. So guys and girls, this is the crux of this session. So let's come to the summary of this session. So there are 3 questions which we are trying to answer. Question number 1 is, what is fundamental analysis? Why is it required? Question number 2 is, what are the fundamentals that determine the value of the firm? And the last question is, how to do fundamental analysis. I hope you are getting it. So you may just listen to this write music little bit for around 5 seconds. That again demonstrate the importance of fundamental analysis to you all. See you all in the next video.